Hey guys, it is Julie here with JT Wealth. In today's video, we are taking a look at two stocks that JP Morgan analysts have recently rated a buy. So let's get into it. Alright guys, welcome back and thank you so much for being here. Like I said, today we are going to take a look at two different stocks that JP Morgan analysts are predicting over a 30% rally for. So in today's video, we are going to take a look at these two companies and what they do, plus what these JP Morgan analysts predict for their futures, as well as other analysts. Now, as you guys may know, if you've watched my previous videos, I do love using TipRanks as one of my resources for research. I find it really helpful being able to see analyst ratings on these and what their outlooks are, plus how those analysts are ranked themselves. So I am very excited to announce that I do now have an affiliate link for TipRanks. Now, of course, they do have a free plan that works great, but there are some extra perks that are really helpful with their premium and ultimate plans. So make sure to check out their site. And if you are going to sign up for one of those plans, make sure to use the link down below to let them know I sent you. And of course, if you enjoyed today's video, make sure you hit that thumbs up button and let us know your thoughts in the comments down below. All right, now with all that being said, let's get into these two companies, starting off with Context Logic. Now, you probably don't recognize that name, but these guys are the parent company of Wish.com, and they trade under the ticker WISH and are currently at $22.88 per share. This e-commerce marketplace has become known for its social media ads, both for their ubiquitous presence and their entertainment value. Wish has a knack for drawing traffic and customers, and it has become the third largest online retail site in the US. It was founded in 2010 and is headquartered in San Francisco, and is one of the largest and fastest growing global e-commerce platforms, connecting more than 100 million monthly active users in over 100 countries to over 500,000 merchants around the world. Wish combines technology and data science capabilities and an innovative discovery-based mobile shopping experience to create a highly visual, entertaining, and personalized shopping experience for its users. This combination has allowed Wish to become the most downloaded global shopping app for each of the last 3 years. Now, Wish ran up quite a bit of hype in December when they first had their IPO, and in their first day of trading, their stock actually dropped 17%. The initial pricing was around $24 per share, but the day closed closer to the $20 price point. Even so, the company did raise over $1 billion on its first day in the market. Now, the post-IPO quiet period has expired, so this week we saw a dozen analysts pick up coverage on this stock. The bulls on the company see a strong mobile e-commerce play. UBS analyst Eric Sheridan, for instance, gave the stock a buy rating and a set target of $28 for the share price. He says the company stands to benefit from several factors, including accelerating adoption of mobile commerce, and can be a play on emerging economies and cross-border transactions. He sees a target market of about 780 million households, those with internet access but household income under $75,000. Oppenheimer analyst Jason Helfstein is bullish as well. He set an outperform rating and a $30 price target on the stock. He says the company is well positioned as a leading value-oriented marketplace to benefit from the secular shift towards e-commerce for discount retailers. The relative underpenetration of e-commerce in discount channels can yield outsized momentum and greater potential for multiple expansion versus other internet marketplaces in verticals that are already further adopted. JP Morgan's Doug Anmuth began coverage with an overweight rating and a $30 price target as well. He says that Wish targets an underserved market catering to value-conscious buyers, many with annual household incomes below $75,000, through affordable and mostly unbranded products. The company has less than 1% of the global mobile e-commerce market. Stifel analyst Scott Devitt has a bit more of a cautious outlook on the stock and rates it a hold. He has a $22 price target, a little bit below the IPO price. He says shares have fallen below the initial offering price of $24 and currently trade at a discount to the peer group, as debates surrounding the issues of profitability, China-related risk, and the user experience and its long-term impact to growth are still to play out. While Wish possesses many of the attributes we appreciate in a global marketplace, we hold a neutral view while the current debates have yet to be resolved. Overall, the Wish stock comes in as a moderate buy, with 8 buy ratings and 4 holds. The average price target comes in at $26 per share for just shy of a 13% potential upside over the next 12 months. Now with TipRanks Premium, we can look at a detailed list of the most recent analyst price targets. So we can see the breakdown of those buy and hold ratings here. The worst price target comes from Goldman Sachs at $19 per share, which would be a drop of about 17%. And on the highest end, we have a $31 price target for over a 34% potential gain. So definitely more of a mixed bag there as far as outlooks go, but still some pretty nice potential on the positive side. Now the second company that we're taking a look at today is PASG Bio. They trade under the ticker PASG and are currently at $27.50 per share. PASG Bio is a genetic medicines company developing transformative therapies for the treatment of rare monogenic central nervous system or CNS disorders. Now, there are approximately 7,000 rare diseases out there, and 80% of rare diseases have a genetic component, and 70% of rare genetic diseases produce abnormalities of the central nervous system. PASG Bio is currently targeting rare CNS disorders that affect babies and adults who suffer from severe clinical manifestations and severely shorten survival. Right now, there are 0 approved disease-modifying treatment options for their targeted rare diseases. Their corporate model is designed for success with their Penn-GTP partnership, giving them access to cutting-edge research and development and access to next-generation technologies. They have a broad and robust pipeline with 17 total program licensing options and an integrated manufacturing supply chain that is flexible and scalable, and are well-positioned with their corporate foundation with a robust financial position. The company has 3 main drug candidates under development. Their PBGM01, a treatment for GM1 gangliosidosis, PBFT02 to treat frontotemporal dementia, and PBKR03 as a treatment for Krabbe disease. All 3 are in the IND-enabling phase of the development cycle, and the company announced earlier this month that PBGM01 has received FDA approval to advance to their phase 1/2 trial. As far as that robust financial position, they have a strong cash balance of $335 million as of September 30th in 2020. They have cash on hand to fund their operations into 2023 and the runway to potentially deliver meaningful catalysts over multiple programs. The upbeat outlook for PASG's research program underlies the JPM stance on the stock. 5-star analyst Anupam Rama has upgraded his firm's rating from neutral to overweight and set a price target of $35, indicating over a 30% upside on the 1-year horizon. Backing his upgrade, Rama notes the FDA clearance on PBGM01 and writes, "We expect focus to return to the upcoming GM1 data mid-year, which will represent the key initial clinical catalyst for the company. Based on known preclinical data, we would look for the initial PBGM101 GM1 data to not only de-risk the program itself, but also the company's broader platform." Now, there are just 4 analysts in total that cover the PASG Bio stock, but it does come in as a strong buy, with 3 buy ratings and 1 hold. The average price target is $32.83 for just shy of a 20% upside over the next year. And looking at that detailed list of analyst forecasts, we can see that the most recent ratings do come from some highly rated analysts. Both of the buy ratings come with $35 targets for over 28% potential upside. So there we have 2 stocks recently covered by JP Morgan analysts with some pretty healthy potential upside over this next year. Of course, you guys know I always love hearing from you, so make sure to leave your thoughts down below in the comments. What do you think of these 2 stocks and their potential, and what other stocks are catching your eye lately? Keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant to bring some new companies to your attention that you can then go perform further research and due diligence on before making any investment decisions. If you made it all the way to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a wonderful day, and cheers.